What's up, everybody? Welcome back to another episode of the Creative Rise podcast, episode 207. We are getting to the end of 2025, which means...
The end of 2024.
Sorry, end of 2024, going
He's
into 2025,
already there.
which means that we have the time that this episode comes out, we have 27 days left in 2024, which for a lot of people is like, that's really cool, that's fun. For some of you guys, that should be scaring you because you might not know how to actually use the last 27 days to maximize what happens in your business's finances. So today we are talking about what it looks like to actually stop overpaying on taxes and what you need to know in the last 27 days of the year and how you can be prepped for it. So welcome back to the show, guys.
Welcome back to the show. If you are from the United States, I hope you had a great Thanksgiving. I'm still full from Thanksgiving. We are down here in the desert, which if you're watching this on YouTube or you're seeing this maybe on Instagram, you can see we're in the beautiful desert right now. So we just spent a week down here. It's awesome, gorgeous, so much fun. We're about to play golf right after this. So we're having a great day here. So we are, thankful you guys are here, and Thanksgiving was awesome. But yes, definitely jumping into the conversation of taxes brings up a lot of feelings for most people. I know for me, when I first started my business, I was like the first person in my family to start like a business like that. And I had no education, no experience, nothing like that surrounding taxes, especially because I came from being an employee where my taxes are taken out for me before I even see my paycheck. And so you don't really deal with them that much other than getting your parents' accountant to start working on your stuff as soon as you start making money. And that's exactly what I did. So I had zero education around it.
Can we park
Didn't
there?
know what I was doing. Yeah.
Park there for a second, because this is one of the things that I think is a huge misconception with creatives is they think that when you start your own business, a lot of creatives think that, oh my gosh, I now have to start paying my own taxes. It doesn't come out of my paychecks automatically. And they think that's actually a burden.
Right. It's like,
we've got a lot of friends that are employees.
Yes.
Who gets the better end of the stick when it comes to taxes?
100%
Self-employed people
business
or
owners.
Exactly.
You guys, it is the biggest gift that you do not get pre-taxed on the money you make, and you're going to understand that concept more if you don't understand it right now towards the end of this episode, and you're going to see how that's actually like a superpower for you. And if you can get to understand how this whole system works and get confident around it, man, really cool things can happen for you financially.
A quick, really high overview on what Christy's talking about. If you're really new to running your own creative business, when you are an employee, when you get paid, the taxes automatically come out of your paycheck, and the employer, we pay ourselves out of our own company, technically, and that happens when we get our own paychecks from our own company, right? When you are self-employed, your taxes, when you get paid $10,000 from a client, they get to your business, they get to your bank account, and you then get to decide what you do with that $10,000 to mitigate how much tax you have to pay on that $10,000. So that is a total different ballgame than an employee making 10 grand or a self-employed individual making 10 grand, as Christy just said. So that is not a burden.
No,
you got to learn. You might be burdened by it because you don't understand how to navigate it, but that's exactly why we're doing this episode. So excited, but jump back into your story.
I was very burdened by it when I first started my business. It was like the scariest thing because you're waiting to the end of the year to figure out how much you're going to pay, and you have no idea how much you're going to pay. You're just like sitting there waiting for the tax bill to come in, praying you have enough money in your bank account to be able to pay that giant tax bill. And if you're creative who's really, going for it in your business, like I was, every year I was making more and more and more. And so every year my tax bill was getting higher and higher and higher. And I felt like I was just so confused, didn't know what was going to happen. And actually, when I had an accountant, but it was like my parents' accountant that I'd basically just inherited, all this kind of stuff. And I remember when Joey and I met a long time ago now, we were talking about our taxes, and I was like, yeah, man, I owe this much. And it was like this huge lump sum number. And I'd already been paying my quarterlies too. And I was like, yeah, I have to pay this much in taxes. And he was like, are you kidding me? And he was actually probably making more than I was at that time. And he was paying
we were both making six figures, and I was paying substantially less in tax.
Substantially less. And I was like, wait, this doesn't make sense. And so if you're like me and you're kind of like waiting for the end of the year with like nervousness over, oh my gosh, am I going to be able to pay this? I don't know if I'm going to be able to pay this. I don't even know what it's going to be. If you're someone that's like, man, I just am like, using my personal bank account to like get client checks in there, and it's all mushed up and weird, and I don't keep my
Personal
receipts,
Venmo.
and I got personal Venmos going on, and you're constantly afraid the IRS is just like over your shoulder ready to audit you, and that freaks you out. I'm so glad you're here, because this episode is going to help clear up the waters for you. It's going to help give you some tools, some tips, maybe some more understanding around taxes, so that you can actually go into it confidently and feeling like you're actually set and you're doing it safely, legally, and wisely, which is how I feel now, and it feels way better now than it did all those years ago. High five.
I love it. I love it. Okay, guys, so there's 3 things you guys have got to understand about taxes in order to actually stop overpaying on taxes and feel a lot better about your tax situation going into the end of the year. My goal for every single person listening to this is that in 12 months from now, you will know exactly how much you can expect to pay in tax. You'll have the money put aside.
Yes.
You'll have maybe even a bookkeeper helping you navigate it all. You'll definitely have an accountant. But the first thing, in order to actually get there, is we have to understand what are taxes. So a really quick high-level overview of what taxes are. Taxes are not the money you pay to the government based on what you make. Taxes are the money you pay to the government based on what you keep. Now, this is why being self-employed is such a good hack for this, because when you are an employee, you have to pay taxes basically on what you make. When the government, sees your paycheck, they automatically take stuff away from you before you even get it. When you're self-employed, you get to make the money, decide what you're going to be using to build your business, which is deductible, which then lowers how much income you have to show, which is what you keep, aka profit, and then because of that, you pay less tax. So this is
you don't get taxed on your revenue.
You get
what
taxed
comes in,
on
you get
your profit.
Taxed on your profit.
I want everybody to look at me as I say that. Not revenue. You do not get taxed on revenue. You get taxed on profit. If you don't understand that, I guarantee you are overpaying on taxes. So it is very, very important you understand that first things first. So why I say you have 27 days left for the end of the year. This is important. Why there's a timeline on this is because your profit, what you keep, is determined on what you make between January 1st and December 31st. So whatever you can do throughout Jan 1 all the way to December 31st is going to decide in your financial books, is what we call it, your profit and loss stuff, how much money you made, how much money you had to spend to operate the business, which is eligible deductions, which is going to leave you in your profit loss statement with your profit actual number, right? And then that's the only thing you're going to get paid taxes on. So if it's March and you're trying to figure out how to lower your taxes for last year, there's some things you can do, but for the most part, the year's over. You have 27 days left. So I want you to really, really make sure, like let's say, here's 2 examples. Let's say you had a massive, massive year this year. You listen to the podcast, you grew your business like crazy, and let's say your business went from 50 grand to 115 grand. And let's say that the amount of money that you spent to actually operate the business this year didn't change. Well, that means you have a lot of profit, which if you are looking to have a lot of profit and you're looking to fill your bank accounts, looking to fill your savings accounts, looking to maybe buy a house, it would be a great year to take all that profit, pay the large sum of tax on that profit, and then be able to keep all of those earnings for yourself personally. That might be you. If that's scenario 1, if that's you, that's awesome. If scenario 2, you're like, I don't need to buy a house right now. I would rather invest in my business in ways that make sense and are actually necessary, not stupid investments. But I have some things that I think would be really great to invest in my business, and I have the cash. Why don't I make a few investments that will actually help lower my profit, which would then lower my taxes? Example, you've really, really been wanting to buy a content retreat or something you're wanting to go on that you know is going to help you make more money, but you just have been feeling guilty about spending the $4 or $5 grand to go on the trip and make it happen. If you got the money, it might be a good time to do that before the end of the year, is to book something like that, right? Mm-hmm. Which could lower your profit, which then lowers your taxes. So again, we're not making stupid decisions. We're not making decisions just for the sake of, oh, it's going to lower my taxes. We're making decisions if there's stuff that you know is going to help you build your business. You can have the money sit there and be claimed as entirely as profit and then pay high numbers of tax on it, or you can lower your profit by spending some money in a very responsible way on things that were actually going to be enhancing towards your business. So that is very, very important. You can only do that for the next 27 days if you want it to count for the calendar year of 2024, which is very, very important, okay? That is why I say we have 27 days left.
Yes, and if you're wondering what are some are things that are deductible? What are expenses that I can spend my money on that will count against my revenue to lower my profit for my business? We have an entire episode where we literally deep dive onto these deductions. Episode 143 on the podcast. Scroll all the way back and find it and listen to that. It's a really good deep dive. But let me list off here possible deductions you can take that are legal for your business.
And I need to say this, if you're not taking every single one of these deductions, I
You're being
bet you
dumb.
I bet you're already spending the money on these for your
Yes.
business. If you're not like actually keeping this, writing it down, having it all categorized, and then having it reduce your profit every year, you are overspending on taxes.
Well, let me
This is
also
why we're
just
doing
give
this episode.
a very elementary thing as well. Just because you spend your money on this does not mean your accountant, your bookkeeper, or you really know that you are actually filing that as a deduction. So make sure that is actually being communicated to whoever's doing your year-end taxes. It's not just like, oh, well, I spent it, so it should just automatically be deducted.
Yeah, that's
It
not how it
doesn't. You have
works.
to report it. So here are some deductions that we love that we want to make sure that you are making sure that you get as deductions. Your phone bill. You're using your phone for
Keep
your
track of
business.
that.
Your phone bill. Your computer. Camera equipment. Subscription services. So like HoneyBook, QuickBooks. Lightroom, whatever it is. Business-related travel. So if you're traveling somewhere and you're working at all while you're there, business travel. Business-related meals. Let's say you take out a client to go get coffee. That is tax deductible. Health insurance, anything towards your health is tax deductible. Company cars and gas, office spaces and utility, even your home office, you can write off the amount of square footage that you use for business in your taxes. You got office furniture and supplies. Maybe you bought a stand-up desk this year
Maybe
from
you've got
Costco.
a studio in your home.
Maybe
to
you got a
shoot content.
studio. Make sure you're writing that stuff off. Any contractors. So if you're doing shoots and you're hiring models, you have second shooters, assistants, editors, associate shooters. Make sure you're writing all of that off. And then we've got business education. If you're going on a content retreat, maybe you bought into the mastermind, maybe you're jumping in and just bought a course from our Black Friday deal. All of that is tax deductible.
Save that
Anything
receipt.
in education, tax deductible. So if you've got a purchase that you're like, I've got some room, I would love to lower my taxable income, you guys make some investments before the year end. Talk to your accountant about how much that should be and make some investments that are going to be smart investments. Don't just go out and spend it because you're like, oh, I've got room on my credit card. No. Make wise investments with your accountant so that you can make really good choices.
The moral of this story is, you shouldn't really be going out and buying additional things for the sake of lowering your taxes. We're just trying to actually push the point home that we want you to make sure you're actually capturing, categorizing, and keeping the receipts for the things you're already spending money on that are tax deductible and business enhancing to your own business, because that is going to reduce your profit, which in turn reduces the amount of money you pay on taxes at the end of the year. And that is going to help you stop overpaying on taxes. And there's a lot of you guys that are overpaying on taxes. I promise you that. So that is number one.
That is
number two
one.
is really, really important as well.
Yes. So number one is all of a tax overview, how deductions work, what that actually looks like. Number two is how to have peace of mind when it comes to the IRS, the CRA, whoever your governmental entity that oversees taxes and managing taxes and auditing, to how to feel a confidence and a peace of mind surrounding if you were to ever get audited. And I know...
and just to keep track of it, because it gets really confusing if you don't do what you're about to talk about.
And to just peace of mind in your own business of like, at the year end, you're not freaking out going, oh my gosh, well, where's that receipt from 6 months ago for this, computer software that I got? No. You can actually have peace of mind and do things, set up a system that really creates really great things for you. So we like to talk about how there should be always separation from your personal finances and your business finances. So when money comes in, right now, if you maybe just started your business or whatever it is, maybe you've got, you're getting checks from people and you're just cashing it into your personal bank account. Now, I understand when you're getting started, that's often how it is, but as soon as you go get a business license, you're really starting your business, you're going to make this thing an actual business, you need to create separation. Why? Now, this is because when the IRS or whoever your entity is looking at you at your year-end taxes, they want to make sure you're not muddying the waters with things in your business. You're not calling, maybe you went and bought a sweater that you're going to wear to a party and they're like, well, that's not a business expense. Why is that on the same bank account as the things that you're buying your camera, you're
From the
doing
same
this?
credit card.
It doesn't look good to the IRS when things are all mushed together. They're going to be more like, oh, well, there's probably some mistakes here. We need to go through here. So you want to create separation.
Big
So
red
as soon as
flags.
you go get a business license, go and get a business bank account. So go to your whatever, Chase, Wells Fargo, whoever you bank with, go and ask for a business account. You want to set up a checking and a savings. Now we've got a bunch of other ones.
At minimum, yeah.
At minimum that we can talk about later. But you want to make sure that you'll get a business checking and a business savings. And anytime you make money from your business, it goes into that account. You never you never go and spend personally out of that account. That is only for business transactions and business deposits, okay? You're going to do the same thing with your credit cards. If you do credit cards, you want to make sure you'll get a business credit card. It doesn't have to be a quote unquote business credit card. It can be any type of credit card, but it's solely used for your business only. So you go get a Southwest card, an American Express, whatever it is. That's going to be your business card, and you're only going to spend business purchases on that. And then you've got all of your personal cards that you use for personal expenses. So you want to make sure those are separate. Along with Venmo, if you're receiving Venmos from other people,
Or any type of
any
app
type of
like
app,
that, yeah.
things like that, you want to make sure that those are separated from business and personal. Again, you guys, this makes it just so much cleaner to get your year-end taxes done. If you were to ever get audited, it's so much cleaner, and it just overall builds a system where you have a lot more peace of mind.
Yeah.
And
Which is
bookkeepers.
incredibly important.
And it
So
also makes your bookkeeper's life a lot easier
if you
too.
have a bookkeeper, it'll make the bookkeeper not want to kill you, which is important because you guys should have. If you're making more than 25 grand in a year, you should start having a bookkeeper.
Yes.
It's a waste of your time to do all that stuff. So,
100%.
Okay, number 3, the last thing that is so important in order for you to in order for you to stop overpaying on taxes is that you need to actually not do it alone. So the fact that you're already listening to this podcast shows us that you're not doing it alone. You're trying to learn. You're trying to do this in communion with the people that, might be a few steps ahead of you. But you want someone who is giant light year steps ahead of you, which is a really, really good qualified accountant. So the best way to not do tax season alone and stop overpaying on taxes is by actually hiring an accountant that is a good accountant. And
I paid for this.
I have to say there are differences. The same way there's huge differences between good photographers and bad photographers and great photographers. There are huge differences between good accountants and great accountants and horrible accountants. Now, quick little description: a bad accountant is somebody who sees you as a number. They see you as a client. Oh yeah, we'll just push them through. We ask you very limited information. They get your information. They put it through their software. It spits out your tax return. They submit it on your behalf, and you then pay what you're supposed to pay. That is not a good accountant. Maybe for an employee, if you were an employee, that might be okay for you because a lot of the tax stuff is already figured out because of the way the government has their hands in corporations' pockets and how that all works. If you're self-employed, there is so much creativity to be had in order to figure out which tax strategy you're going to go with, where you should put money, where you're going to take deductions, where you're not. It is so important to have a good accountant. So you need someone who is going to see you as a project to get creative with rather than just a number to spit out a tax return and then send it off.
And I dealt with this again, and it's not necessarily like, oh, that's a bad accountant, but it's like the tax code changes every year. Like if you didn't know that, the tax code actually, different laws are instituted every single year and things are constantly changing. And there are a lot of codes that benefit business owners, right? A lot of things that are constantly changing for your benefit. So if you have an accountant who just views you as a number, they're not strategizing with you. You want to look for an accountant. You want to talk to an accountant, hire an accountant that wants to strategize with you to how to take advantage of these codes, of these laws to help get you the least amount of taxable income for you legally as possible. So I had accountants that I, again, inherited from my parents or hired from a friend or whatever, and I didn't do my due diligence of talking to them. And so I paid for it. I literally paid for it.
Literally paid for it.
Whereas now,
thousands of dollars in overpayments.
yes,
to
and
the
now
government.
we've had multiple accountants who are unbelievable. They'll call us up and be like, "Hey, you need to go spend this much money because it's going to save you this much in taxes."
Or, hey, I got this
right
one
now.
question, and if your answer is yes to this, and if it is true, I think we can save you another $7,500 this year.
Exactly.
What do you think about this? You know,
You
like
wanna-
that's the type
yeah.
of accountant you
So
want.
what would you say, Joey, is like maybe a couple things you want to look for in an accountant? Like
Yeah.
just off the bat,
Couple quick
questions
things.
to ask
3
them.
things. So you want to look for an accountant who sees you as an opportunity to save you money. It's a creative problem for them. They get excited about your opportunity and excited about your situation. That's number 1. Number 2, you want to look for an accountant who actually has a reputation of getting creative, a reputation of saving people money, not just pushing through tax returns. Number 3, you want to also look for an accountant that will educate you on the process. You don't want to ever have an accountant who's just like, "Oh yeah, well, I'll deal with it. I'll look for ways to save you money." You want to be involved in that conversation so that you know what's actually going on. This is a very, very delicate and important relationship. The government is your biggest silent business partner. They take the biggest cut of your money besides anybody else. They
Yeah.
might even take more of your money than you even keep if you're not doing things properly. And so it's very important that you have an accountant that wants to educate you on that relationship between you and the IRS, or you and the CRA, or you and the Australian Tax Board, whatever that's going to be. So that's very important. So I think when it goes for looking for an accountant, all you have to do is say, "Hey, do you have any experience working with creatives like myself? And if so, can you tell me about what you've done before?" And if they say, "No, I don't really have experience with you guys specifically, but here's a lot of the opportunities I think you guys could look for," you're basically just going, "Here's my situation. Here's how much money I make. Here's how much money I typically spend on business deductions in a year. Where can you find opportunities to save me money? You know, I'm currently paying this much on tax. Do you think there's any opportunity for you to save me more money?" Have that conversation with them. Every time you go to hire a new accountant, you should basically be saying, "Here's the math problem in front of you. Can you save me more money?" It's a simple question. If they say yes, then awesome. Start working with them. Start to try and figure out where those opportunities are. But it is so important that you put, like, this is so ridiculous, but this is kind of a hot take, but like you should be way more concerned about who you are working with in terms of your accountant than like what new camera you're gonna buy,
100%.
and what new lens you're gonna buy, or what type of tech or editing software. Like, we spend hours researching that stuff. But most of you guys haven't spent even an hour researching the best accountant for your business, and it's time that you start if you want to start saving money on taxes.
That's great. I love that. So I hope this helps clear up the muddied waters for you, whether you feel like you're just getting started in the tax conversation or maybe you're seasoned. I hope you learned something today. If this was helpful, share it with a friend. Share it on your story. Tag us at Creative Rise. We'd love to repost you. Love to get to know you. And yeah, we're just so grateful you guys are here, ending out the year with us. We're so excited for 2025. We're so excited for the growth that's going to come to all of our people in the community, and we're excited to partner with you along in that to help you succeed at doing what you love. So
yeah, guys.
that's why we're here.
We'll see you guys next week. If you enjoyed this, leave us a written review on the Apple podcast platform. We'd love that. And most importantly, share with a friend. It's the best way for the show to get out and help your friends save some money on taxes as well. So we'll catch you guys next week.